DeFi has evolved like a Pokemon from DeFi 1.0 to DeFi 2.0. Staking rewards, extremely high yields and APY. Is this truly the new crypto banking system, or is it a massive rug pull waiting to happen? One thing that cannot be denied is DeFi has truly changed. So let's not waste any time. Vamos, mi amigos. So, before we get started, if you haven't already done so, like and subscribe to the channel, very much appreciate that. Every like and every sub that I get helps to feed a hungry cat, a hungry dog on the street. Every like and subscription that I get helps to home a lonely fox on the street. You know, the lonely foxes that you see, kind of digging around in the trash cans and stuff like that. So like and subscribe, not only for me, but do it for those skinny cats and the skinny foxes on the street. You're helping them, not me. So help me to help the world, make it a better place, as Michael Jackson says. So with that out of the way, and after you've liked and subscribed, let's get this thing started. So we can't start off talking about DeFi 2.0 without the originator, the number one Olympus DAO. So if you don't know what it is already, I'm sure most of you know or have heard of it. Olympus DAO is it's a DAO, it's a decentralized autonomous organization. Kind of going with the company analogy, it's a company that's governed by code rather than a few powerful influential individuals. So it's completely governed by code, and it's also governed, of course, by the community. Everything is voted upon rather than a few powerful individuals, as I've said. And also, it's centered around the OHM token, ticker symbol OHM. So the way this works is, and this is different from DeFi 1.0 in terms of how they acquire assets and the liquidity bootstrapping process. So the way it works is they have a bonding process where essentially they would give you a discounted OHM token if you provide other assets. So they would give you like a 10-12% discount on OHM if you provide other assets, whether it's DAI. Essentially it's other assets, and this is why they've been able to accumulate so many, a massive treasury, because they've been this different type of liquidity bootstrapping that they're doing. They're giving you a discounted OHM if you provide another asset, and so they've accumulated, I think, over $600 million worth of assets. And also, of course, it's the massive APY. If you stake OHM, then they can give you a huge APY. I think it's some of the other DAOs are like over 30,000% APY. Basically, you can double your money in a very, very short time space and make true passive income, as they say, because all you're doing is staking your OHM, and you get kind of high interest back. So it's a completely new cryptocurrency, a new system that's been introduced, and it's completely revolutionized DeFi. Now, going into this other article, what's happened is it's bred a lot of different forks. So kind of going into this article, they say imitation is the highest form of flattery in crypto. This manifests as forks or copies of the project's code base. In that sense, Olympus DAO must be feeling pretty flattered. A slew of forks, over 30, according to DeFi influencer Munifish of the Olympus DAO codebase, have emerged. Over 30 forks, and Olympus DAO is not even that old. It's only been around for a matter of months. So already over 30 forks have emerged. The leading one is Wonderland. So leading the pack of forks is, in terms of market caps, Wonderland, whose time token has gained over 340% in market cap in the last 30 days. That has landed it in 131st spot in terms of market cap. amongst all digital assets as of October 26, which is just over a month ago. So a lot has changed since then. And also, just to kind of add to that, it's only 131st, so you can imagine how early it is. DAOs are not this new revolution was still very early days, which is of course a very good thing.
Really?
Wonderland is on the Avalanche blockchain. That's another thing to bear in mind. A lot of these forks are kind of popping up on different blockchains. They're copying and pasting the Olympus DAO code base and just doing it on a different blockchain, as I'll show you in a minute. So there's a lot to be gained, but there's also a lot of risk because they're just copying and pasting. One person in one of my crypto communities said it beautifully with great wisdom. He said, if all you have to do is copy and paste the code base, and because these forks are becoming very popular, making millions, of course you're going to have a lot of bad actors, because all you have to do is copy the code base, do a bit of marketing, and bang, you've made millions. So obviously there's much danger and much risk attached to these kind of forks. However, one fork in particular, which I've mentioned, I made a video on Klima Dao, is, as I said, Klima Dao. It's almost surpassed the Discord community size of Olympus DAO, which is the original one, 34,000, and Klima Dao is on 33,000. So it's almost surpassed it. And one tip this article gives, which is very, very important, is, if you're just forking and copying and pasting, that doesn't really, you're not differentiating from the original cryptocurrency. So if the forks want to become successful, you actually have to differentiate properly and have a different purpose. Like SushiSwap compared to Uniswap, they copied and pasted Uniswap, but they kind of changed direction a little bit. And that's why Klima Dao is a very important cryptocurrency, and one that has a bit more chance of success. It's relatively successful already, but it can go the distance because it hasn't just forked, it's actually moved the direction. It's more about climate change, about carbon assets, rather than just copying and pasting and being a reserve currency. So what's driving the momentum of Klima Dao? Klima's stated goal is to accelerate the price appreciation of carbon assets. Climate token is backed by 1 ton of carbon, so basically if the climate token increases in value, so will the cost of producing carbon, incentivizing people to find cheaper alternatives to the element which contributes as much to climate change. As far as Olympus forks go, Klima may be the most differentiated. So let's head over to some of the forks. So this, in terms of how many forks there are, as I said, there's over 30. You've got some of the Phantom Chain, which I've purchased some of, Terra, Polygon, Solana, Phantom Chain again, 2 on Harmony. So the forks are numerous, so you've got to be extra careful when you're investing in the forks. Obviously the incentive is you catch them early, make a lot of money, but the dangers are great, and this is one of the dangers. This Olympus DAO fork called Snowdog hit by the 90% crash. So essentially it was like a meme fork of Olympus DAO, and it went down 90%. It's a mad thing. So basically what happened was they said that they were a meme fork. The protocol announced on launch that it would use all of its assets in its treasury after 8 days to orchestrate a massive buyback. So normally when you think of buybacks in the kind of stock world, the consequence is a massive increase in price, results in a massive increase in price. So now everyone expected this. They expected the massive price increase. So the planned buyback resulted in many holders accumulating SDOG in anticipation of a massive increase in price. However, when the buyback started late Thursday, the Snowdog token instead plummeted, eventually losing over 90% of its pre-buyback value. So look at this, the chart, insane, a massive drop. No one would have seen that coming. So going further, The price crash caused many in the Snowdog community to accuse the developers of pulling the rug by using the buyback to exit their position first, leaving other investors stuck in their position as prices crashed. And the developers tried to kind of explain what happened. We wanted to orchestrate an event that could capture the attention of the crypto ecosystem while procuring entertainment to people watching it from the sidelines. For the SDOG price to be above the market price before buyback, which was 1200, sellers needed their SDOG to be part of the first 7% of the supply being sold. So essentially, if you were early, you would have been fine, but majority, i.e. 93% of the supply, they essentially got bummed by the price. So that's the danger when it comes to the forks. Of course, including myself, I'm trying to get the early ones, make some money, but the danger is, you're going to overlook, because of the FOMO, you're going to overlook the dangers like this Snowdog. You're trying to make more money, so you just got to be very, very careful when it comes to these things. Hence why, personally, I only invest small amounts, and then as time goes on, I would, dollar cost average. Okay. So one of the main forks, as mentioned, is Klima Dao. The market cap is rising, significantly. It's already close to $1 billion in market cap, but it's still relatively early days. So you can still make decent returns, especially the staking part of it. The yield is incredible. So even if the price doesn't appreciate that much, you're going to make a lot of money from staking. Olympus DAO is the main one. One other one, that I've invested in. This is still obviously almost 10% compared to Klima Dao, $177 million market cap. And of course the common thing with these forks is the APY is crazy, and this crypto in particular has only been going up. Even during the current crash, it's continuing to be stable and to potentially and also increase slightly. But the main thing you want with these cryptos is for the price to be stable and not drop. An increase would be great, but you want it to be stable so you can continue to make good money staking it. Now this is a fantastic calculator of Olympus DAO, how much money you can make from staking it. And I'm going to give a shout out to the calculator guy. I saw this from another YouTuber, and I'll put the link in the description. Essentially, every fork has slightly different APY percentages, and this is one of the lower ones because this is the first ones. The other ones have crazy much higher APY, so you can use it as a base. You can also edit some of the numbers, but you can kind of keep it the same. And so you can calculate how much money you make, especially essentially the passive income. So even if you just put 1 ohm, right? So if you stake that 1 ohm, the current price is $730. How much is it now? $730. So that's accurate. And you can kind of look at the return on interest. So on a daily basis, it's 0.66, weekly 4.72, 48.52, and the yearly is 1,009%. And so every day you're staking the Ohm token, you're making $4.83. Every week that's $34, and every month that's $354. So every year you're making $7,368. So that's just from 1 ohm, which is $730. What if you made that 5 ohm? Instantly the passive income you're making every day, $24, every week $172, and so on, so on. So that's from 5. That's a decent return, So 5 times 730 is about 3,500, give or take 3,600. So you're making good returns from that. You stake it for a week, you've made $170. So you get the picture. The returns on your investment is quite good, and all you want basically is for the asset to remain stable, and you're going to make a good passive income. But of course there's risk involved. Quick look at Bitcoin and Ethereum to finish off this video. Of course, we've had 2 red candles, so it looks like the correction has continued. It was turning around a little bit, but got rejected from the previous resistance level. Unfortunately, it wasn't able to get past it. Unfortunate, but it's okay. In the long run, we will return. So the next major levels that we can expect to find support is going to be around 51, 52,000. On a weekly time frame, there isn't too much in the way of support, so we're looking at 52,000 as the next level. It doesn't look like it's slowing down as of yet. There hasn't been any rejection on the weekly time frame, so we can expect 52, 51, maybe a bit lower around this level of 49.50. But in the long run, it's all good. I do think, this bull run probably won't peak this year. I think it'll probably extend into next year, Jan, Feb. It's looking like that at the moment, especially the way it's correcting right now. Obviously, it could be wrong. Hopefully, I'm wrong. The faster, the better. But the cycles does seem to be lengthening over time. So it's more likely we're going to see it extend into next year, Jan, Feb, maybe March. Then it is going to be finishing this year. Moving over to Ethereum. Ethereum also, of course, has corrected further. It's still above the main resistance level, now support of 3,900. If it breaks that, I think it's going to be peak for Ethereum. It's probably going to potentially it could open the floor up towards 3,300, which is the next floor of support for Ethereum. So hopefully it's going to stay above that. But let's see what happens. Regardless, the future is bright for crypto. So this is an opportunity to get things on discount. You've got to obviously reverse mentality of buying when it's bullish and then selling when it's bearish or in the red. You got to reverse that. Buy when it's in the red, sell when it's in the green. So we'll leave it at that. We're not going to look at the altcoins, otherwise this video is going to get a bit too long. So hopefully you got some value from that. I think DeFi 2.0 has definitely arrived. The answer to the original question. This has definitely changed the landscape for DeFi. This is a true crypto banking system emerging from Olympus DAO. The fact that the reserve currency OM is backed by assets. So that is truly amazing. It's still very, very early days. So I think it's worth really putting some chips into this, especially during the bear market. It's going to be very interesting to see, because basically what happens is as price goes down, the interest goes up. So during the bear market, if you put money into this and stake, you're going to make crazy returns. So that's going to attract a lot of crypto investors. So bear that in mind. So that'll be all for this video. Peace out. See you next time. Peace.